Hi, this is Randy Finney with Right Side of the Chart, and this is a market wrap for Thursday, February 14th, 2019. Earlier this morning, before the market opened, I posted updates on those 60-minute rising wedges on NQ and ES yesterday. I posted those on the front page of the site. And what we had is two things occurred this morning. Well, one of those, it started out last night. We had a breakdown, but as I mentioned this morning, it was very unimpulsive. Yesterday, late in the session, around a little before, a little after the market closed, those that rising wedge on QQQ, the small rising wedge that I pointed out. Apologies, that's NQ. We're looking at the NQ Nasdaq 100 futures right up here on the left. That broke down two things with the breakdown. Number one, it was unimpulsive. As I mentioned, when you're trading breakouts, whether it's long or short side, ideally you want to see the breakout impulsive. Impulsive means a big red candle, increased volume, or big green candle if it's to the upside. And so what happened here, it was a very unimpulsive breakout, and NQ backtested throughout the night and into the morning. And then we had some economic data released at 8:30, and that gave us a very impulsive move down. Now, there's one update to members of the site or anybody, even public content. That was a public post this morning. I noticed afterwards, later today, this trend line here. Let's take a look at it, zoom out a little bit. It's a potential trend line that certainly came into play today, and it coincided with support. When I put up the charts of NQ and ES this morning, I'll get to ES in a second, I showed that it would most likely bounce a scenario where we went down this morning. It was a knee-jerk reaction to the economic reports. But here we go. Right here you have one reaction, and this is early January, two reactions, three, and this gave it a fourth reaction. So essentially, we need to now see today's lows go. It's support both on ES, which I'll get to in a second, the S&P 500 E-minis. There's this trend line, and I'm going to get to QQQ and SPY in just a second, show you some additional trend line support. So these are really big levels, and to keep it very simple, you don't need to write the levels down. Just look at today's lows going forward this week, whether it happens tomorrow, the next day, the following day. Those, I believe, because they're pretty significant levels now, will trigger at least a near-term, probably spark a near-term sell-off. And targets really are the same. If you caught my update yesterday, I'm still looking for a move down to test the top of this range, which is also the bottom of this recent range here. And that takes us down to about, 6807 or so on ES. And I'll get to that, the comparable levels on QQQ in just a second. The bigger picture is this wedge here. You still have prices wedging up. And as I said yesterday, we certainly have the room to kick up a little bit more if NQ and ES, if the futures want to take out the recent highs by a small amount, that's fine, because what's happened here is we've had divergences building, and it's really starting to steepen. The slope of these divergence lines, that tells us that momentum is quickly waning, and that's evidence here. Here's a pretty impulsive rally, a little correction, a little less impulsive rally, and then we've been moving sideways. You can look at it two ways, and you have to respect it. Maybe this is another consolidation period like this, and we go and break out above. Again, too much in the charts, I don't think so. I favor a breakdown here, and at minimum a move down to that bottom of that range. And then, as I talked about yesterday, if that gets taken out, we'll just have to see how the charts look if and when we get there. And if so, I think there's still a good chance we come back down to the bottom of this range here in the coming weeks or so. Okay, and just before we move off NQ, just to reiterate, these are just divergence lines up here, and so there's plenty of room right now, especially with how steep these divergences are, for those lines to move up. In fact, ideally you'd want to see, if you're looking for a reversal trade here, you want to see these longer term trend lines right here keep intact. And so what that would entail is a push up. Maybe that would come tomorrow, probably tomorrow or the next day. We don't have much time left. We're really pinching up here in the apex at these wedges, and that could look something like this. But again, whether that happens, whether this happens overnight, this is the level I'm watching. Today's lows, as I said, it will take out, well, first of all, it's a reaction low. Those are always, worth watching and trading. And this is all short-term stuff. This has nothing to do with long-term, looking out, months from now, where we're going. This is just short-term trading stuff. So those are what we're looking for there. Let me show you this on one other one other board here. This is a different charting platform, but you can see it nice and clean on this one without all my extra trend lines and support levels. There's the larger wedge. And again, in hindsight, I wish I would have caught this one yesterday. It wouldn't really have mattered much, made a difference, but it is support. And it is worth noting that that's what contained that snapback today. And as of today, now we have a fourth reaction to help validate that. But again, the bigger picture is this. This is a very clean rising wedge, very clean divergences. And so a break of that wedge, minimum, there's your measured target, the widest part of the wedge. That should easily take us down to that target I just showed you right there. That's that same top of the recent trading range, or the bottom, I should say, and also the top of that previous trading range, natural targets, in my opinion. And if we go down there, that'd be the next one. Okay, ES, as I mentioned yesterday, and I talk about this a lot, there's a lot of indexes out there you can watch. And if you're trading with small caps, you should be watching the Russell 2000, IWM, RTY futures, things like that. But as far as the broad market goes, these are the big dogs. These are the leading, mega cap stocks. And the two I watch, I like to watch are obviously the S&P 500 and NASDAQ 100. You can keep an eye on the Dow, but it's just 30 stocks. I think these are a little more diversified, and you get more bang for your buck trading NQ because of the high tech weighting in there. But yesterday, these were the charts I posted, very clean. That was a nice, a lot of reactions off this 60-minute wedge. And as I mentioned yesterday, when NQ broke down, not only was it not impulsive like you like to see, but ES didn't break down. And as I stated, you want to see them both break down. Well, you got that today. We broke down, and we didn't just limp through. We had a very impulsive move down. And if you look at what we had today, we had a little kickback rally on those charts I posted this morning. ES was right about here on that first support level I have, 27.36. And so I showed a scenario of it bouncing up and then continuing down. So this is just, in my opinion, a natural kickback rally off support. Yes, the trend has been resilient, but nothing that I've seen today at all indicates that these breakdowns are not intact. We're still below the wedges. ES, in fact, hasn't even back tested. And just as with NQ, if ES, you can see the divergences beginning to become a little more steep here. But there's plenty of room if ES wants to have a little thrust up tomorrow or one day this week and still keep these patterns intact. Here, I know I'm making a mess of that chart, but I think you can see where I'm going with it. Let's just extend this trend line and pull this divergence line up a little higher, extend the divergences here, let's say to that level. And so this is what a back test might look like in the next overnight or in the next day or two. Come up, back test the wedge from below, still keep the divergences intact. So from a technical perspective, nothing's really changed here. And again, I like the fact that the breakdown was impulsive. It helps to confirm that. QQQ, we still have an active trade on this, so I'm not going to get specific on the targets. There's a couple of price targets that have zeroed in on, but you can see the gist of it here. Is at this point in time, this is a trend line that's developed most recently, and this is certainly the one to watch. We actually have on this one now 4 distinct reactions, which makes it pretty valid there. Well, you want to call that 5. The fifth one called 4 or 5 reactions, and the same story as the futures. You're not going to see the charts won't be exactly the same because the futures are trading virtually around the clock, where you only have the 9:30 to 4 p.m. trades here. But other than that, you do have the divergences, and I like to see that. Sometimes you'll get divergences on the futures first, and you don't have them on the indexes. Right now, we have them across the board. And again, take out today's lows will mean that we take out this trend line. And we do that, and you can see, roughly where we're going. And this really meshes again with that those futures charts. There's that recent trading range there and the previous trading range. That's it. Let's wrap this one up here. We got it finished in under 10 minutes. I've done plenty of looking at the long-term charts yesterday, and again, that's a whole nother animal, if you will. Looking at weekly and monthly charts. This is just what's likely to happen over the next week or so here. All right, we'll wrap it up here, and I'll continue tomorrow. If I see any significant developments, I'll post an update. This has been Randy Finney with the right side of the chart. I hope you enjoyed it.